Hi everyone, in this video I'm going to do a brief review of Microsoft earnings fiscal 2023 first quarter results. So let's get right into it. The theme here is that earnings per share fell as revenue growth decelerates for Microsoft. Overall revenue increased by 11% to a whopping 50 billion in the first quarter. Of course, Microsoft benefited during the pandemic as more folks were spending more time at home, working from home, learning from home, and so that required an investment in home offices, which Microsoft benefits from tremendously. And so now that economies are reopening and people are going back to previous pre-pandemic habits, that's a little bit of a strain on Microsoft's revenue growth, and it should be so, it could be so over the next few quarters as well. And earnings per share of $2.35 in the quarter was down 13% from the same quarter last year. Expenses rose faster than earnings did, and that caused earnings per share to decrease. The company's hiring people, making acquisitions, and all of those costs are adding up. And if revenue is only growing 11%, it's not enough to make up for the heavy investments the company is making. Interestingly, Microsoft's cloud revenue was up 24% to 25.7 billion. It's rising up to be a formidable competitor to Amazon's cloud segment, and that's a lucrative business segment for Amazon. Amazon is generating nearly half of the overall company's operating income is coming solely from the cloud segment. Amazon's e-commerce sales lost money in the most recent quarter, and so the cloud business over at Amazon is funding the entire business for the most part. And so Microsoft is rising up to give a challenge to Amazon's cloud business, as well as Google's cloud is rising up as well to give a challenge to Amazon. And this segment could potentially become a lucrative profit generating segment for Microsoft. Search and news advertising revenue was up 16% year over year. I found that to be interesting because many advertising companies are struggling right now, especially the social media advertising companies. They're reporting much slower revenue growth than this. And in fact, Alphabet also reported revenue in its a couple of days ago, and their ad revenue growth was slower than this. And so this was interesting that Microsoft reported ad revenue up 16% from last year. Microsoft Xbox segment, which sells game content and services, decreased 3% year over year, and that's for the same reason I mentioned earlier. Folks were staying home a lot more often at this during this same quarter last year, and so they were spending more money on game content and spending more time gaming. And now that economies have reopened and people have more entertainment options outside of the home, they're going out more, going to concerts, going to movies, going to ball games and all of that stuff, and so they're spending less time gaming, and that's evident in Microsoft's Xbox segment, which saw revenue decrease 3%. Fortunately for investors, Microsoft returned 9.7 billion to shareholders through dividends and buybacks in the first quarter, although that was down 11% from the same quarter last year. But that was on par with how much free cash flow decelerated from last year. Free cash flow of 17 billion was down 10% from last year. So it's understandable that Microsoft skewed down its shareholder returns as its free cash flow decreased as well. I would say that's prudent cash flow management from Microsoft in that regard. And looking forward to the next quarters or to the second quarter, management guided to 5% revenue growth in its productivity and business segment in Q2, while expecting growth of 17% from its cloud segment in Q2. So, encouraging to investors that Microsoft's cloud segment continues to outperform the overall business and gain uh, uh, gain overall proportional share of the business's revenue. So this is good news for investors going forward. All in all, investors were slightly disappointed in Microsoft's quarter, and the stock was down a few percentage points on the day following the release, mainly due to this revenue guidance going forward and also slowing revenue growth and decreasing earnings per share. The risks are elevated going forward the next few quarters as the worldwide economic slowdown continues. Investors are concerned how much that's going to impact Microsoft's earnings. How many more quarters of decreasing earnings per share growth are investors going to see from Microsoft? All right, so that's all I've got for this Microsoft stock earnings update. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.